Nasdaq changed a rule that had been existing for decades. But I found out what changed and who became the obvious beneficiary. I really couldn't stop thinking about it because that rule change is about to affect millions of ordinary people who have never even heard of it. So let me break this down. So Nasdaq is basically one of the world's biggest stock marketplace where you buy tiny pieces of companies like Apple, Google, and Amazon. And there's something called the Nasdaq 100. It's a list of 100 companies, and this list matters to you because millions of ordinary people have their retirement savings in something called an index fund. Think of an index fund like a basket that automatically buys a list of companies on that list. So when a new company gets added, every fund have to automatically buy shares in it whether they want to or not. Before now, a company had to wait 3 months after going public to be able to join this list, and that waiting period existed to give the market time to actually figure out what the company is actually worth before billions of retirement dollars automatically flows in. But earlier this year, Nasdaq changed the rule from 3 months to just 15 trading days. They called it the fast entry rule, and almost immediately after, Spacex chose Nasdaq over the New York Stock Exchange. Now, Nasdaq said the rule change came after broad industry consultation and applies to any large company. But critics point out that the timing is difficult to ignore because SpaceX became the most obvious beneficiary immediately. So what's SpaceX? SpaceX is Elon's rocket company, but their biggest business right now is Starlink. And Starlink is the only part of SpaceX that is currently profitable. Here are the confirmed numbers. SpaceX plans to sell its shares at $135 each, raising $75 billion in a single day, making it the largest IPO in the history of the financial market. That is 3 times bigger than the previous record. Before I continue, let me explain what an IPO means. An IPO is simply when a private company let normal people buy a piece of it for the first time. And Elon Musk, who owns roughly 42% of SpaceX, is set to become the world's first trillionaire. But here's where critics start pulling a different thread, and the timing they are pointing toward is worth understanding. In 2022, Elon bought Twitter for $44 billion, and he promised investors $12 billion in revenue within 5 years. But 3 years later, the total revenue for Twitter and XAI still sits below $3 billion. So he had a problem. His Twitter investors had lost a significant value and needed a way out. And here's what happened next. By the way, all of this are documented and confirmed. XAI acquired Twitter in 2025, and XAI is Elon's AI company, a chatbot called Grok. In 2025, XAI lost $6.8 billion. Then, February 2026, SpaceX acquired XAI in the largest merger in history, valued at $1.25 trillion. So now, when you buy SpaceX, you're not just buying a rocket company or Starlink, you're also buying Twitter and also a loss-making AI company, all bundled together according to critics. Is this a genuine business opportunity, or a carefully constructed way to let early Twitter investors finally find an exit through SpaceX reputation? That's what critics argue. But SpaceX says the merger makes strategic sense for building AI data centers in space. Now the valuation. SpaceX made $18.7 billion in revenue last year, but lost $4.9 billion in the same year. And now they wanted to value them at $1.75 trillion. So in plain English, for every $1 SpaceX earned, they're asking you to pay $95 for a piece of it. Critics compared that to Amazon, which traded at $18 for every $1 it earned. And now SpaceX is asking for 5 times that. Before I forget, Morningstar, one of the most respected independent research firm in the world, formerly valued SpaceX at $780 billion. That's less than half the IPO target. Now, here's the part that affects you directly. Even if you've never heard about SpaceX in your entire life, because of the fast entry rule change, within 15 days of this IPO, your pension or 401k might automatically buy SpaceX shares. An estimate suggests between $15 and $30 billion in forced automatic buying from retirement funds. What critics are trying to say is you'll be buying a company and losing $4.9 billion a year. They just bought a loss-making AI company. But the bull case is genuinely strong because SpaceX revolutionized rockets, made reaching space dramatically cheaper than anyone thought possible. They also hold $24 billion in US government contracts across NASA and the Department of Defense. And they are targeting a $28.5 trillion across SpaceX, the internet, and AI. And if spaceship works in full scale, the cost of reaching orbit collapses, and SpaceX captures the upside of the entire new economy built in space. And even Morningstar, who called the valuation too high, said the stock will hold up immediately after the IPO due to the strong investor appetite. So here's where I landed. 2 completely different pictures. A company that genuinely changed what's possible, with real growth, real government backing, a massive long-term vision, but also a valuation that one of the most respected firms on earth calls significantly overvalued, a merger that absorbed billions in losses right before going public. I'm not going to tell you which picture is right because I genuinely don't know. So if you have a different perspective or an angle I haven't considered, please tell me in the comments.